Say, how are you?
Good, how are you, my brother?
I'm okay, I'm okay, I'm okay. How is everything beside?
So far, so good.
Yeah, that's good. Did you see the VIX?
Yeah, it went up, but I had TP somewhere. Went and hit TP. When I came back, I found out, oh my God, it's flying.
Yeah,
Yeah,
yeah. So our
that was
final our,
finished.
our final major TP has been hit so far, which was this
Ah,
resistance there.
yes.
That was our major TP that we expected over the buys that we have been up to. So
Mhm.
far it has been hit. Let me just remove everything. So this is the daily time frame. Daily time frame. Um, we explained that we're currently in a bullish market ever since this day that we had this reversal pattern, whereby markets
Mhm.
now started to form high highs, high lows, high highs, and high lows. So currently this is somewhere a high high.
Mhm.
Oh, right. So on the daily, the thing that we are mostly concerned about is identifying the major buyers. Obviously, the major buyers has been bullish. So if you check now, this bullish bias, the market never even showed any signs of a change in this bias. Because if you check this bullish bias, this was a bullish market structure. A bullish market structure always sit by higher highs and higher lows. And if you check, let me just mark my areas here, my higher highs and my higher. So that was a high broken there. This is a high broken there. This also is a high broken there. So the principles of market structure, they always tell us so long this what do you call this higher low, because these are higher lows now, higher high, higher low. So the principles of market structure, this is what they state. They state that so long, let me take my, okay, so long market structure is like, so here, this was the high. So this high was the defining high, the decision high. Obviously, after we entered here at the bottom here, the first initial buys, then this lower high here, it was actually a deciding entry point there, a deciding level for a shift in the market structure. Because so long this one was broken, that's where we could now say market structure has shifted. And you saw that was broken, then retested. So now, so long we are maintaining, so long these higher lows, higher lows, so long these higher lows are not violated, market structure is still bullish no matter what. What am I saying here? I'm trying to say here, let's say here, higher low there. Let's say the market came back here to this high, then came back here, but failed to break this level. Went. So this market structure is still bullish because this low, this higher low, it hasn't been broken. It's still being maintained. Comes higher high, back to this higher low, goes back up, so no matter what zigzags it does, but this level here, so long it doesn't break this level here, we are still in a bullish market structure. All these fluctuations that you will find, all these fluctuations that you find in between, they are there to mislead people.
Oh, on the same point, do we look at that at daily, and then as to say, so long as that is not violated, we don't care what happens, because I'm sure there's a lot of dancing on H4 and others. So we can maybe, as you marked there, have our own markings of daily, that whatever happens, maybe even the trend line, like now I can see if you're consolidating that way, it means a trend line trader is more than confused, I think.
They are very much confused today. So they'll be entering, coming out, entering, coming out, entering, coming out, even though they might not take a loss, even though they might not take a loss, but the trades that they'll be entering, unless that person is sure and is aware of the major trend that we are still bullish, I'm only going to focus on buying opportunities more than selling opportunities, unless they're informed in that way. So the reason why you have to focus on the higher time frames for the major analysis. If you go to 1 minute, 5 minutes, 15 minutes, 30 minutes, you discover that market structure, this bullish market structure that we say, that we are saying it has been a bullish market structure ever since here, you discover that on smaller time frames, there have been a lot of different market structures, bullish and bearish, in this one bullish movement that we are seeing on the daily. If you go to lower time frames, you discover that there was a lot of noise that was happening all these days. So the reason why the daily is the one that has to give you the decision point to know, even, let's say, even the smaller time frame is currently bearish, right? But if our daily is still saying we are bullish, what you do on a smaller time frame, you need to make sure that you look for that buying opportunity, that buying moment, because we are still bullish according to the daily. The daily is the one that moves all this, all these other time frames, all these other smaller time frames. So even though you might find H1 or maybe 30-minute bearish, right? But you go back to your daily and you discover that we are still in a bullish market structure. We are still in a bullish market structure. What you simply need to do is to observe on that smaller time frame entry points that are in line with your higher time frame analysis. Do you understand?
Yes, and I'll call this down here a neck, and I'll call it a neck as we go up. So maybe the V neck or the A neck, if you like. Those necks. Yes, there's a neck down here for
Down.
the triple, yeah, where you drew your first resistance.
Okay.
That is the triple bottom part, but there's a neck up there that was broken. Yes, I'll refer to that similar thing as necks as we go up again. There's another neck there, which was broken, where you drew another one, and then that one. So yes, that's another neck. And if I look properly, looks like the retest comes back to the neck almost all the time. Almost. Okay.
Yes.
So my goodness, what did I want to say? I wanted to say, what scenario should now give us a go ahead that we are heading for a bearish market still on this daily level.
Right. For example, I've mentioned this issue of higher lows, higher lows, higher lows, higher low, and the next higher low is here. Next higher low is on this level here. The next one is most probably going to be on this level. Right. So when you see these higher lows now being violated, it means the market, if you see a market breaking a higher low, it means it's going to make a what? A lower low, which is now the shift. The shift, it has to happen both to the upside and to the downside. For example, one might come and say, here the market failed to make a lower low here, right? Which gave us this triple bottom. That was one indication to say most probably market structure is about to shift to the opposite direction. That is why we call these reversal patterns. But the full confirmation now, it was given by the break of this lower high. That was now a full confirmation to say market structure has shifted now and it's fully bullish. So meaning all the trades that one would have taken above this level, they were confirmed buys. These ones, yes, they were okay based on this level of support and also this triple bottom, they were okay. But I'm simply saying after the break of this lower high, those trades, they were now fully confirmed more than these ones. Same as here. What we for a fully confirmed bearish market, this market had to maybe reject here. The rejection here, it was going to be the first sign. Maybe that would be a reversal pattern. First sign, right? Then, once we break this low, this higher low,
second sign,
that's the confirmation now. That is now confirmation to say now we are in a bearish market. And what you do, you simply enter upon the retest. In your smaller time frames. So it means what is going to be happening is now someone who entered their trades simply following this issue of confirmed and confirmed entries and unconfirmed entries. You realize that most of the times, if you focus on confirmed entries, you take little to no losses most of the times. Little to no losses when you're always trading in the confirmed direction or in the confirmed moves more. Yeah, so you actually need to know that where is the major direction going? Where is the confirmed move going? Once you have identified that, you need to trade along that direction. Once you trade along the confirmed direction, you experience little to no losses in your trading. But people who attempt to trade the opposite, opposing the major trend, opposing the major confirmed moves, because the market always follows the path of least resistance. The path of least resistance, it means the current trend. The market prefers to follow the current major trend. For example, let's say this is a bullish trend, right? So the market can actually, it prefers to follow that bullish trend more than selling. In this bullish market, it prefers to buy more than to sell, because that's the path of least resistance, because market structure is already shifted. It shifted here. Once it shifted there, it created the path of least resistance in the buying side. So meaning the market prefers the buying side more than the selling side. That is what we call the path of least resistance. So whenever you're trading, you need to identify which one is the path of least resistance in this market that I'm currently trading. Once you identify the path of least resistance, trade along the path of least resistance. Here in this bullish market, it doesn't mean that sales were not there, they were there, but in as much as you could take the sales, but you know that I'm mostly targeting more buys, because the buys are the impulse moves. Most of the times they're the ones that will give you the major moves whenever we're in a bullish market. Are we together?
Sure.
Right, so that was the thing. So from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, almost three, close to 4 weeks, almost 3 close to 4 weeks of this same bullish movement. Almost 3 close to 4 weeks of just maintaining a bullish movement. So our final target, which is here, that was the final target of these buys that we took here. These buys that we took here, we had the first major target was on the trend line. If you remember, it was on the trend line. With this trend line, then we say we're going to buy from here, our target there. Then around the trend line, they came out, which was good. Then this pullback back to this broken high, that was supposed to be an entry point. People were supposed to enter there. Then also the break of this trend line, even the retest, especially the retest, that was also another entry point as well. So the daily will help you to get rid of so many noise, too much noise that is on the market. People who are trading 1 minute time frames, 5 minute time frames only, without paying attention to what is happening on the higher time frames. What happens? Let me tell you what happens to those people. What happens to those people is that today they might make money. Tomorrow you find out they lose money. Today they make money. Tomorrow, because what is happening on the smaller time frames, they might get a certain direction, of which that direction, if it's opposing the major direction, that setup or that particular, it won't last for long. So those people, for example, let's say someone got a bearish structure on smaller time frames. That bearish structure is not going to last long, because the higher time frame, the overall structure is bullish. So I've seen people trading crash and boom on 1 minute and 5 minutes, which is, if you ask me honestly, if ever you are trading, no matter which instrument, especially these crash and boom traders. I'm really much concerned about them. I'm really, really much concerned. They haven't started trading crash and boom. There's, if you ask me, the majority of crash and boom traders, they are simply taking chances. They are simply gambling the crash and boom. They are not trading it the way it should be properly traded. It should be treated just like any other market without mentioning the issue of spikes and ticks. So crash and boom traders, what they simply need to do is to have this picture, have the overall picture, what is happening in the long run. Once you identify what is happening in the long run, come back to your smaller time frames and identify an entry along the path that you have seen on the higher time frame. That is what they're simply supposed to be doing. It's not a problem to enter on smaller time frames, but it becomes a problem when you focus on the smaller time frame and determine your major buyers using smaller time frames. Smaller time frames, they don't give you any major buyers. What they simply do, they simply confirm that they will move to make sure that they are in line, in sync with the higher time frame. Are we together?
Sure.
Right. So daily time frame, weekly time frame, monthly time frame, those are serious time frames that you need to always pay attention. Always pay attention to what is being said there. Always pay attention to what is being said there. Daily, monthly, weekly. The monthly and the weekly those ones can give you a rough bias, because oftentimes they might not show you clearly. They might not show you clearly as much as the daily. Because the daily, if you ask me, is usually clear. If you find that the daily is not clear, 4 hours has to be clear. 4 hours has to be clear. So those time frames, daily, weekly, monthly, if you find that the daily is not showing you anything that is making sense, just go to H4 and get the overall picture. Once you have the overall picture, you are done. Once you have the overall picture, you're done. What you simply do on smaller time frames, identify the coded areas. There are always coded areas on the market, areas where you are supposed to enter. They are coded on the market. There are areas where people are supposed to enter. If ever they could be written, I think everyone right now would be a billionaire. Every trader would be a billionaire. If ever they could be visibly written, say enter code 1, enter code 2, enter code 3. If ever they could be written, and of which that will never happen. But you now as a person now, it's now your job now to identify those entry codes. Once you identify the entry codes, you don't enter anywhere on the market. There are always entry codes. Once you follow entry codes, let me tell you the truth, you are always going to experience little to no losses on the market. Once you trade on the entry codes, it's rare that you experience huge losses or huge drawdowns, especially in trades. Those are trades that you realize that you enter a trade and immediately after you enter, you find yourself already in profit. Why? Because you traded on an entry code. Every time you enter a trade and you see that there's no drawdown or there was just a little drawdown before you went into profit, that area that you entered is an entry code. It's a coded area where you were actually supposed to enter. Are we together?
Yeah.
So what people call manipulation, let me tell you what people call manipulation. What people call manipulation oftentimes is not really manipulation. Even though there is manipulation, but other times it's not really manipulation, but it's simply a person who placed a trade on a non-coded area. On a non-coded area, let's say the coded area is here. The coded area is here. Then you enter, let's say before, just below the coded area. or let's say, so whenever you enter not on the correct area, you find that you experience a lot of things. You experience a lot of things. You experience, so that's what people, they might say manipulation, they might call it whatever, all sorts of names, but it's simply you who made a mistake of entering where you were not supposed to enter. There are areas where you are not supposed to enter. Trading, you make more money by observing entry codes, by actually waiting and observing entry codes. Once you identify the entry code, then you enter. But the majority of the time, you're simply waiting. You're outside, you're waiting. The majority of the time, you are waiting. The majority of the time, you're waiting. Either you're waiting for an entry code or you're waiting for your targets to be reached. Are we together?
Sure.
So that is it. Currently, we are at a major resistance now. Major resistance. That's a major resistance. That's a major resistance. That's a major resistance. So our market structure has been bullish for the past weeks, and we're currently at a level of resistance. Being on a resistance, whilst the market structure is bullish, it's a tricky moment that can confuse a lot of people. We don't sell because we have seen a resistance. Just because we have a resistance must not give you a right to say selling time. It depends with the moment. It depends with the what? The moment. I want you to check the move from here to there. You realize that all the supports were never broken. Support, 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 support. All the supports were never broken, but rather the what? The resistance were being what? Broken. Why? Because we're in a bullish market structure. So in a bullish market structure, we actually expect the resistances to be what? To be broken. So right now, what you simply need to wait for, let's wait to see how this next daily candle will come. This next daily candle, if it comes back to retest here and respects that area, and respects this area, one can even take some buys there. After taking those buys, we now need to see the reaction on this resistance. Once this major resistance is broken, it's done. The deal is sealed. The deal is sealed. Once this major resistance is broken, we now look forward to what? Further buys, further pushes to the upside. But just because we're at a resistance, it mustn't give you a right to say, so at a resistance, let me sell. Let you sell? No. You don't just rush to sell. You wait for confirmations. You wait for confirmations. Once you get the confirmations, then that's when you can now say, I'm now entering. I'm now entering based on confirmations, not based on what I'm feeling. So those are other levels that we're also looking forward to on the VIX, major levels. I'm only interested on the major levels. All these minor levels, they are useless to the market. Major levels are the levels that were respected most of the times. They are most likely to be respected in the future. So what we can also do, we can also plot a bullish channel. So here one could have drawn it like this. It was also fine. It was also fine. It was also fine. It was also okay because the market actually tried to break here, broke, but went back inside. which was okay because that one might be called a fake out. It was okay. That trend line was okay. Or someone can come and actually draw this new channel, which is more clear. You can draw this new channel here. Right. So once you've drawn this one now, you know that below this channel, the sales that you take below this channel, they are more confirmed than any sales that you take above this channel. So it's simply the same thing. This channel here is acting as a major support. This is a major support. It's supporting price above here. Supporting price. So this is a major support. If ever we could flip our chart, you could actually see that this is a support. Major support. If ever we would shift our screen, we could actually see that this is a major support. So below this major support, sales that you take below this major support, they are what? They are confirmed sales, more than sales that you take above here. So you realize that this channel can actually be obeyed for up until the market goes where it wants to go. The market can decide to obey this channel up until it reaches all those other levels. It can do that. It can definitely do that. It's the market. It can definitely do that. So here it can come, reject, go. So it can do a lot of things. The market can do a lot of things, So long that channel is maintained, we are happy. We are what? We are happy. What we do, we simply trade along the direction of the major trend. So that channel is also supporting us. It's also going to be supporting all our buys that we'll be taking. Then once you see this major channel broken, that's where sales now can start, confirmed sales, that's where they will start to be taken. If you take your sales after the break of this major channel, they will face little to no drawdown at all, unlike placing them above this channel. So the daily is a key time frame, a very key, significant time frame, very important time frame to know and to master. Once you master that, you are done. You are done. So here, we'll just shift this to here. So yeah, this is it, guys. This is it. Draw that channel. One can come and do this. You are still okay because the market is the one that violated your trend line, not you. So, but me currently, I'm much more comfortable with this one. Once this one is broken, you realize that now things are about to happen to the sell side. Things are about to happen to the sell side. So that is a key channel now, a key channel that we are now looking at. So now it's waiting time now. Waiting time, for example, one can even label this zone as a non-trading zone. Why? Because this is a small area, a very small area, just from here to here. You have a resistance and you have a support. Resistance and support, the market can even consolidate in that area before even breaking out. So you realize that one can even label this as a non-trading zone up until we break out either to the upside like that or to the downside. We always have the other possible scenario in mind as well, or to the downside. That is also possible. So that area right now where VIX is currently, it's actually a non-trading zone. Why? with a resistance and an immediate support. These areas, they are too close to each other. Too close to each other. Let's see, at least if it breaks here, maybe it can actually sell, maybe back to this trend line. But so long it's in between here, that's a tricky zone to trade. You simply need to wait, save your equity, save your capital, whilst you're waiting outside. So here, I don't even need to go to 1 hour, because I'm still seeing the same thing. We're in a non-trading zone. Non-trading zone up until we break out of that zone. That's when we can look forward to say otherwise. That's when we can look forward to say otherwise. So what can happen as well, on the 1 hour, you can even plot another channel. This channel as well can guide you as well. 1 hour channel, 1 hour channel, it can also guide you. That is the channel. This channel also guided us in terms of entries as well. First touch, second touch, here, third touch. Here, there were a lot of touches here. One could have entered also using this trend line here. You would have entered trades there. Enter, 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 enter. Your stop loss just below the trend line. Check how far it went. So this also was a trend line here. Broken, retested, went all the way. So same as here, I'm saying, once you see now this channel being broken, that's where most probably can get sales. But these sales can go and touch that trend line that we have already on the what? On the 4 hour. Then once that one is broken, now that's where you see the daily. That's where you see the daily now breaking major areas. So this one will be a target now. Once you see that 1 hour channel broken, this will be a target. But we know that those sales, they are not yet fully long-term sales based on this channel. But once you see this channel being broken, now we are looking forward to a long-term movement now for the sales. So that is our current view. That is our current lookout. Once you see this resistance broken, it's entry time. It's time to enter. It's time to enter. It's time to enter. So that is it, guys. That is it. Once you see the 1 hour channel, that 1 hour trend line that we placed broken, that's where you can consider taking some sales. Taking some sales all the way to the trend line. Anyone with a question? Any questions?
No.
Okay, that's good. That's good.
No question.
That's good. That's good. So VIX is a very predictable instrument, if you ask me. Once you master it, but before you do that, before you master, that's where you'll be seeing, you'll be thinking, hey, this thing, what is happening with VIX? What is happening with VIX? That is before you master.